What's up, investors? It's the Russian dude, and let me immediately tell you that Google paid $20 billion to Apple back in 2022 so that their search platform, Google, becomes default in Safari browser. What do you think about this investment? But okay, so now let's talk about why right now we might potentially see a Bitcoin bear trap. So, first of all, it is worth mentioning that last day the net outflows of Bitcoin ETFs reached $34.4 million, which is like 15 times less than the day before. Besides that, a lot of short-term Bitcoin holders who bought this coin recently, right now they are not profitable, as you can see from this graph. Because if you remember from my previous episode, this last month of April became one of the first ones in the long time where Bitcoin was steadily going down. But right here we have another even more interesting slide, which shows that in the last 24 hours a lot of Bitcoin whales, they started buying a lot of this cryptocurrency. Specifically 47,000 bitcoins were purchased recently. Then we have another picture which shows that the venture capital invested into Bitcoin increased by 29% quarter over quarter. And then whenever the job statistics was released, this was a massive trigger to skyrocket the price of Bitcoin, which in a very short period of time reached $61,000, at least at the moment of recording this video. We're gonna talk about these job reports and why is it so important very soon, guys, so please keep watching. And basically what I'm trying to say here is that last several episodes I was mainly talking about negativity for Bitcoin, which, if you are a true investor, is actually an attractive thing for you, because you should buy whenever there's a blood on the street, especially if it's yours, and you should sell whenever everyone is optimistic. Exactly what we're seeing right now, massive fear on the crypto market. So long story short, according to this graph, which includes some technical analysis, we might potentially see a bear trap. People might think, okay, Bitcoin is over, Bitcoin is dead, let's sell it, but in fact this might be a time to buy it because, as you've been able to see from my previous several slides, institutional investors, Bitcoin whales, venture capitalists, right now they are the ones who started investing. Right, now let's quickly talk about this jobs report and why is it so shockingly important. And to begin with, first of all, in the month of March, America added 315,000 jobs, which is a pretty good number. And if you know the narrative of the Federal Reserve and Jerome Powell, one of the things he wants to see is the cool down on the job market, because a lot of employment, a lot of salaries, increase in salaries, they do significantly contribute to the inflation. So, before reducing interest rates, once again, he wanted to see these numbers to go down. And well, apparently, in the month of April, America added only 175,000 jobs, approximately, which is still a decent number, but it is way below expectations of 233,000. And this was a massive signal to the Federal Reserve and to the stock market in general, is that finally something looks like it is working, the economy is finally slowing down, even though this is not necessarily a good thing, but this is what they want to achieve. And so basically, once again, the talks about reducing the interest rates, they resumed, and now potentially we might finally see 2 interest rate cuts, as Jerome Powell planned all along, and the very first one might once again come in September. But guys, as you can see, everything can change day to day. And because one of the biggest things that investors want to see right now is for Federal Reserve to start cutting the interest rates, once again, these jobs reports contributes potentially to lower inflation during the next inflation report, and maybe this will be a trigger for Jerome Powell to finally start cutting these rates. And ultimately, let's briefly talk about housing situation, which despite everything becomes even now more unaffordable. So the very basic concept, the very basic principle on the real estate market is that whenever interest rates are high, house prices are low. Whenever interest rates are low, house prices go up. And right now we are seeing complete nonsense. We do see that the interest rates, mortgage rates are high, and we do see once again that house prices started climbing up once again without interest rates dropping significantly. And according to some other financial reports, the home prices in the top US cities, they are beating their all-time high numbers despite this economic uncertainty. And to make things even worse, even though right now the average mortgage rate, fixed one, is approximately 7.22%, which is already extremely high. Right now we're in the middle of one of the hottest seasons to buy a house, which usually lasts from March until June, and this is where a lot of people are buying houses. Once again, a lot of demand, not that much supply, or at least the same level of supply, inevitably prices go even higher. So basically, as you can see, the situation, at least in some particular sectors of the economy, is getting a little bit out of control, and politicians and economists, they are trying to balance everything all at once. Inevitably, whenever they do good things in one sector or industry, another one underperforms, so they might fix the situation in the housing market at some point in the future, hopefully sooner than later, but this will create additional problems somewhere else. Guys, as always, if you found this information helpful, please subscribe to my channel and like this video. I'm making these daily reports at this point, and see you next time.